Welcome to The Explainer. Today we're doing something a little different. We're going to crack open a real-world investment memo and see exactly how the pros break down a multi-million-dollar luxury property. You know, this is the big question with any high-stakes investment, isn't it? And to get to the bottom of it, we're going to unpack a super fascinating case study, a luxury condo called 11 Mont Kiara. Is this thing a smart buy, or is it a financial dead end? Let's find out.
Okay, so let's dive right in. First things first, we need to get the basic facts on the table for our subject property. So, this gives us the high-level stats. It's a freehold project, which, is a huge plus, built by a top-tier developer, so the quality is there. But pay close attention to that completion date, 2011. That means it's an aging property now. And trust me, that becomes a really critical factor later in our analysis. So what really makes this property special? Well, its whole strategy isn't to appeal to everybody. Nope. Instead, it's built from the ground up to attract a very specific, and very wealthy, niche. And it all comes down to this one number, 2. I know, it sounds simple, right? But this single digit, it's the core of its entire value proposition. It's the unique selling point in a super crowded market. And it means there are just 2 units per floor. And here's what that low density actually means in real life. We're talking ultimate privacy with your own private lift lobby. We're talking absolutely massive unit sizes. I mean, look at those numbers. This place wasn't built for the average person. It was purpose-built to lure in the absolute highest tier of the rental market. So the whole building is basically a magnet for this wealthy international demographic. The investment memo points out that these are families from over 30 countries. The kind of tenants who are often way less sensitive to price and much more focused on very specific lifestyle needs. And the main reason they all flock here? It's pretty simple. Education. The building's biggest anchor, its main draw, is that it's within walking distance to some of the city's top international schools. For these families, that convenience is basically priceless. Okay, so the tenants seem solid. But what about the money? How is this investment actually supposed to perform? Well, it all comes down to the financial strategy behind it. Now, to really get this property, you have to understand the difference between these 2 key investment strategies. A yield play is all about the cash flow, the monthly rent you collect, kind of like dividends from a stock. A capital appreciation play, on the other hand, is a bet that the property's price itself is going to skyrocket, giving you a huge payday when you eventually sell. And what's so interesting about this slide is how clearly it defines the investment for us. The rental yield is estimated at a very healthy 5.5%, but that long-term capital growth, it's projected to be a pretty modest 2 to 3%. So this tells us, without a doubt, that 11 Mont Kiara is designed as a yield play. You buy it for the steady income, not for a quick flip. Okay, this brings us to the property's biggest contradiction. This is where its greatest strength is, at the exact same time, its greatest weakness. Welcome to the location paradox. On the one hand, life inside this little Mont Kiara bubble is an absolute dream. I mean, you can walk your kids to school in 5 minutes. You've got 3 major malls with all the shops and restaurants you could want right at your doorstep. It's incredibly convenient. But the moment you need to leave that bubble, that dream turns into a total nightmare. There's no practical access to public transit, which means owning a car is mandatory. And the main road, Jalan Kiara, suffers from severe, predictable, and just soul-crushing traffic jams every single day. And this quote from the source material just sums it up perfectly. The very roads that give you access are the same ones that trap you. It's a fundamental flaw that you just can't renovate or fix. So, after weighing all the evidence, the exclusive design, the target tenant, the financial profile, and that glaring location paradox, who is this investment actually for? Let's break down the final verdict. But before we get to the final conclusion, we absolutely have to talk about this one crucial concept, liquidity risk. In simple terms, it's the danger that when you finally decide to sell, you can't find a buyer quickly without having to slash your price. And for a multi-million-dollar condo, the pool of potential buyers is already tiny, which makes this the single biggest risk here. So here's the bottom line. The strengths are powerful and pretty unique. You've got irreplaceable luxury, strong rental demand, and a prime walkable location. But
And this is a big but. They are balanced by very real and significant risks. That high liquidity risk, the terrible traffic, and the ever-present cost of maintaining an aging building to compete with newer ones. It's just not a simple good or bad investment.
So the verdict is actually pretty clear. This is not for speculators or anyone looking for a quick profit. No way. It's a highly specialized tool for a patient, wealthy investor who values that steady cash flow above everything else and has the financial muscle to wait for the right buyer when it's finally time to sell. And, this whole case study leaves us with a much bigger question about modern city living, doesn't it? 11 Mont Kiara offers you this incredible space and luxury inside your home, but it comes at the cost of your time the second you step outside. It really forces us all to ask ourselves, what do we value more? That's definitely something to think about.